And welcome to the pre-market rundown for Friday, June 18th, 2021 for TriggerCharts. Hey, I'm Andrew Horowitz, and I am the co-founder of TriggerCharts. And we are going to discuss a lot going on today. What's happening in the markets, what's happening with regard to some of this volatility that we're seeing here that seems to be a little bit excessive in some areas of the market, and other areas of the market as well. It doesn't seem to have anything going on to be a problem. So we have some questions already coming in about copper and what's going on with commodities, because there's a lot going on in that area. So we'll get to that, and we'll talk about all the things that we need to talk about regarding the really great use of a couple of very key high-level market indicators that we have distilled down into very easily usable techniques to make sure that you have the opportunity to utilize it in a way that is quick, easy, fast, not a lot of learning curve, etc. What we talk about is the discussion of volume-based trading. In other words, what happens when we can trace back and we can identify exactly where traders, institutions, mutual funds, professionals are actually trading? What if we could find that on a chart and label that and figure it out? How great can that be? Because if we know what their prices that they're willing to buy or sell at and where that line in the sand is, well, that makes our job a lot more easy to define where we're going to invest and provide. Again, the word that I bring up quite often is confidence, because we need to have confidence in a trade to make sure that we stay with it as it's moving in the direction that we want, and any little hiccup we don't get pulled out of, depending on our time frames. Before we get any further, I want to mention something. Well, this is all for educational purposes only. It is not an offer to buy or solicitation to sell any security or any information at all. There are no recommendations going on here. Talk about that right in that top headline, right up here. So again, please consider this for educational use only. I'll also mention for all those that are new to the Friday webinar, the pre-market rundown here, that anybody that is on a trial right now of the TriggerCharts Commander Series, if you convert that into a fully paid subscription, you get for free a 4-hour course that you use at your leisure. It's recorded. It's an evergreen type of program that is available for you. And what you can do is learn a lot from there. We will give that to you as a $199 price that we usually charge for that. We will give that to you for free. So write to support@triggercharts.com. Also mentioned we have a little chat room or chat box right here, a chat area. I just put something in there, which is the link to our indicators. But in there, you could also put your name, stock, symbols, things that you want us to review and take a look at today. But before we do so, let's kind of get a quick overview of what's happening in markets, because there's a few things happening. I'm going to actually refresh this page because I made some spelling changes in the background. There we go. Yes, I don't know what that's going on there. Let's see if that updated. Let me look. Yep, that's good. Okay, so with that in mind, there we go. One of the things that has been happening in the last few days is the argument, the discussion, the back and forth banter of whether or not what the Fed is doing is really going to be problematic for the markets. And I'll tell you this, in my interpretation of what I'm seeing right now, any change, anything that the Fed does different than what they've been doing will be very significant for markets. And what I mean by that is that everybody has been pretty used to the Fed being rather dovish, very, very accommodative, going into the area of, hey, don't worry about inflation, don't worry about anything, we got your back, right? I mean, that's kind of what we've all expected and what's happening. Well, any change of that is going to change the mentality and is going to create problems. Already what we're seeing is bulges. We're seeing kind of like when you take a latex glove and you blow it up, right? You take, and all of a sudden you get all these we don't have necessarily bubbles forming, we have these bulges. And any one of these bulges that are going because of blowing up many latex gloves are all of a sudden going to have some problems. And what we're seeing right now already is a massive flattening of the yield curve. The long end of the yield curve is coming down, short end is coming up, with the idea that there is the potential for rate hikes. Now, we saw Bullard talk this morning and use the word hawkish, in his conversation. That took futures down pretty well. And you'll see right now what we're trading at, 279 down on the Dow. The ES is down 27 and 65 on the Qs. Clearly, the Dow has been having one of its worst weeks in months. Gold is popping up a little bit today. I think that's just on the softness that we saw yesterday. Crude oil coming in again, still at 70 bucks, and Bitcoin moving around for no reason at all, doing its own thing. But yesterday we saw a battle between Jeremy Siegel and David Tepper, two major movers of markets. Jeremy Siegel, more of an academic. David Tepper, clearly a hedge fund titan. So Siegel saying, hey, you know what? I think there's going to be a pullback probably because the Fed needs to raise rates. And said that, you know what, it may not be big. Pullback he defines as like a 5% pullback, but it could be a little bit painful for certain areas of the markets. Already, again, we're seeing that reflation trade and the materials. We're seeing the commodities really have a lot of problems over the last couple of days on the notion that there's going to be an increase. I'll talk a little bit about that in a moment, about exactly what happened, why this is happening very quickly, because we are limited on time. But Tepper said, hey, the market's just fine. Market's just fine. Don't worry about it. Everything's going to be cool. We may see a little volatility like we do. You know, there's always volatility for some reason or another. Little skirmish in the Middle East, little political issue, stimulus in, stimulus out, a little bit of a discussion with Japan closing, opening, you know, whatever it is. But what we have now is the continuation of this similar situation that we've been seeing for some time where, you know, the push me, pull me. What is the effect of a change? And what is the most important thing? If you look at the markets and you say, well, earnings are the most important thing, or technicals. I think the overriding thing right now for the last 6 months, 8 months has been the Fed, the ultra easy, unorthodox policy that they've had to try to push up inflation and to try, which they can't do, to benefit the employment situation. Obviously, that's a lot more fiscal oriented. So we have this split, you know, value and growth of the last few days have turned around very significantly, where value is plummeting compared to growth. Still very much energy, utilities, real estate, anything value, financials, well above and well ahead of growth this year, totally opposite of what it was from last year, but it is starting to show a little bit of a turn. You'll see even this morning, on a percentage basis, right, the Dow is down 0.79 on the futures, whereas the Qs are down 0.47. Yesterday, the Dow was down, 210 points or so, and the NASDAQ was up substantially. So what we're seeing is a very significant change in leadership right now. Now, talking about the FOMC, I know a lot of you want to understand what's happening here. Hard to understand. Let's get that straight, because a little more hawkish in the discussion, acknowledging that there is inflation out there, acknowledging that there is the potential for a change in their overall expectations. For example, they talked about a 1%, very significant, 1% change increase in their expected inflation rate for next year, from 2.4% to 3.4%. Wow. That's not a little bit. It goes to show you, by the way, how bad they are at forecasting, which goes to show you, by the way, what is the point of us even listening to anything they say? But you know what? They hold the purse strings. It doesn't matter if they're right or wrong. They'll do whatever they want. So what we have right now is a situation where we have to go along with the Fed. You know, don't fight the Fed. That's a commentary that we've heard for eons and eons. So we have to go with that. But at the same time, we have to realize that they're no better than your average economist trying to predict what's going on, or frankly, no better than a weatherman, because they change from time to time. So they've gone from 2023 to maybe 2022 all of a sudden. Markets worry for about 2 hours, then turn around yesterday. Yesterday was a big change. We did see that yields came very significantly lower on the heels of it for the long end and started popping on the short end. To the right, you'll see a chart here, and let's look at this. This is commodities. Look what's happened to commodities. I mean, we saw this beautiful run. It's almost a pure green run, right? You couldn't have done wrong with buying commodities since the beginning of 2021. Essentially, any signal, if you would have bought, you would have had a beautiful run just right up. Every short signal was kind of like faded, but very quickly turned around, then bought and gapped higher. Here we have the same situation. This is like the third time. Look right here. See commodities come down as the dollar went up. Dollar went pretty high, significantly higher yesterday. And then similar kind of moves to what we saw here. As a matter of fact, if we draw this, kind of like try to draw a quick line here, the size of the lines. Not this one's a little bit shallower right there, of course. But these three, I mean, you can kind of see that they're about the same drawdowns, right? From 17 to 16.5, about 8%. This is about from 1892 down to 18.9. About what is that? That's 5% on that one, and about 5% right here. So we're seeing about a 5% drawdown, anywhere from 5 to 8%, and then a really quick pop back up. The difference, though, I think this time, if there is a difference, is that China's in the game. China said they're going to try to slow down the overall rate of price moves when it comes to commodities. They're going to really try to push it out. So buy the dip on tech was pretty much all of it. Plenty of room for rate hikes, energy, materials, minings, gold, and other commodity groups. We took it on the chin yesterday. Here's the big thing, and I want to share this with you right here. Small change in a very obscure rate that really sucked in. If you look at the reverse repo rate and reverse repos that went on, there was a major spike yesterday, major spike yesterday in the reverse repo market again, and that's been moving up since April or so, and that is taking money out of the economy. What they do is they raise rates, money gets sucked out of the banks, which is kind of interesting. Has to do with the SLR also. The thing is that we have to understand right now is there are so many moving parts and so many obscure and very experimental measures that have been put on the financial system due to not only COVID and the recent recession that we're still in officially. We haven't come out of it yet. Well, probably very soon we'll get called that we're out of it. But because of what happened during the financial crisis, we're still in that mess with the bank oversight and the bank restrictions, et cetera. And all of that is creating additional problems when it comes to markets right now. General market psych, well, we went from the KRI from a +4 to a +2. That came down a little bit. Where are we now? +1. So we did get those indications right there. We talked about this 417 line, which is kind of an important line, which we're trading at right about a little bit above that, 418.02. So there is some support down there. And we saw that there was a move up and then a resolution to blow that off a little bit, cut into the 4 range. Seems to be happening quite often. I think that one of the things that people are thinking is when there's bad news, well, the future looks brighter. And when there's good times, well, we'll focus on the now. So if things are bad, we look at the future. When things are good, we look at now. So kind of a very compressed 24-hour news cycle that's maybe 4 hours long. Stimulus threats, the Dems are saying, hey, if we don't get a bipartisan deal on this stimulus, you know what we're going to do? We're going to do it through reconciliation. $6 trillion. $6 trillion. We're gonna really stick it to you good if you don't agree with us. Kind of bluffing, in my opinion. But I think what we have to all agree is the infrastructure is proving a little bit harder to get done. We got some big moves on manufacturing in China. We got industrial profits up significantly. They kind of passed the pre-pandemic highs at this point. Federal Reserve update. Taper is coming, but it's going to be slow. We know that. They're probably going to lay off on more of the corporates, clearly, and some of the mortgage levels as well. Mortgage bonds they're buying. Inflation expectations, I mentioned earlier, increasing to 3.4%, 1% higher for 2021, 2022 they expected, but nothing new. Everything's just buy. I wonder if right off the bat today, off of the start, this was down at 14,000 yesterday on the open. Let's see if this comes in. I don't know. I would think they'll fade it towards the end of the day. Try to pick it up early morning once again, and then kind of towards the middle of the day, flatten out, and then fade it out to the end of the day. There is no reason for an overnight weekend hold here. Economics, we have slightly weaker numbers overall as the pull-forward effect really starts to abate a bit, and that's something of interest. Inflation is running very hot. Next week, we have home sales, durable goods sales, GDP sales, personal income, and this little ditty right there on the end, PCE prices. PCE prices are the preferred measure of inflation from the Fed. So I talked about the 4-hour coaching course. It's jumping around on me today. We have some stocks to look at. Let's get to and some of your symbols. I'll get to Texas Pie. Texas Pie is asking about TBT. Now, TBT, for all of you that don't know, is an inverse of the, this is an interesting kind of move here. TBT was down yesterday very significantly, right? We look at this move yesterday from $19.99. Let's call it $20 when we thought there was going to be a spike. And I'm going to take off one of our studies. That's the radar. That gives us a very granular look. By the way, what you're looking at right now is the entirety of the Commander series with the addition of the aileron indicator. What I like to use here, I like to use it for a momentum indicator. It's kind of a trending confidence confirmation for me when I look at things, and I can kind of quickly glance. And this is all done by color coding, by the way, and that's what's really important here. We look at the color coding. What's also interesting is you probably see something that what's all this stuff going on? You very easily figure out what's happening once you start getting involved in this. And basically, what we're looking at is from this side to this side, we're looking at shorter and shorter time frames, right? We're looking at weekly here and daily here and 240, 60, and we're looking at 30. On one line, you put one line, one symbol, and you get it all on one line. The Commander Series provides you with a multi-time frame, which nobody else has. A multi-time frame on one line, which is really powerful because it gets me to understand what's happening. Hey, look, on silver, we got a short alert on the daily, but we've had shorts and shorts on the 240 and on the short term, and a short here. That's telling me that maybe something on gold and silver is going on that may be something we need to look at. On this one right here, what is this? GME, long 2 weeks, but yet we're getting some shorts on the shorter term time frames. Maybe that's going to be turning around. I got to keep a watch on what's going to happen on how these fill in inside of here to see that if that does track and then turns over the longer term trend. So it's all about the longer term trend and the shorter term trend. And we look from right to left, always looking from right to left when I look at my screens. Well, we look at TBT. TBT is a inverse of the long bond. And what you saw yesterday was a significant drop here on the way down. A little bit of a pickup, but still very big, significant move, which you would have not expected given the fact that you think that, hey, interest rates are going up. Now, we got caught in this hole as well with a position for clients where we said, we're going to hedge out some, nothing major. We're going to hedge out some using this. And what happened was, as you can see from the inverse, TLT, there we go. TLT did the inverse, right? This is the inverse. This is the 20-year inverse, but this is only one time. Looks the same. But what happened yesterday was that we saw a massive flattening of the yield curve where interest rates on the long side came down and on the short side came up. This is the long side play. You would think that as interest rates start to go up, TBT would be a good play, but I got to tell you something. This is a very, very tricky Fed. They are doing their best to keep rates down. They need to keep mortgage rates down. Interim lending, short-term overnight loans, bank notes, things of that nature, which are on the short end of the curve, they need to make sure they stay low as well. So they're battling right now. But a flattening yield curve is just not good for anybody. That is a sign that rates are going to come up and possibly invert again. Remember we talked about that some time ago, this inverting yield curve, which is really a problem. So when we look at the markets right now and you look at these kinds of things, TBT, there's a lot more nuance that's involved because when you look at this, you would think immediately, hey, you know what? Rates are going up, TBT, which I'll give you, that makes an awful lot of sense. But look at where we went from 22 here, right? We went from 22 all the way down to, let's see if I can get my little thing here, 22. That's 18, 19. I mean, that's 14%. On the thought that, hey, rates are going up. Now, we did see a big move on the initial move, right? When back in the beginning of 2001, then everybody said, hell, inflation, oh my gosh, inflation. And rates did start to move up, and that was a great move for this. It's kind of done right now. I mean, I think you're at somewhere about support right now. I'd rather you look at TBT, TLT. Look at this. Am I going to get my fingers working this morning? They're not working. It's not working. There we go. You have the potential for a breakout right here. You see a yellow candle, which means this is going up. This going up is not good for TBT. You hit the resistance right there, perfectly straight on. If you just draw a quick line across here, you'll see, boom, right there, boom. Hit that resistance, backed off a little bit. But you get above there, you definitely have room up again to 148 on this. I don't see any reason why not. So just something to consider. Let's take a look at gold. A lot of people like to look gold. This is pretty ugly here. So that big move, that whole entire move from, we'll call it, here, where's that? From April, mid-April through mid-May, kind of taken out over the last couple of days. Very surprising, but once we got that signal right there, that was kind of a short-term trade signal. Now, long-term, it's a little bit different. Long-term, he's still right at support right now. We charted this right there, right? Right at support on the long term here. And what we're seeing right now is this little island that we talked about right there. We talked about we had to get above that to really start to make a move. Did not resolve lower. Right now at very good, I think reasonable support at least. You do have the opportunity to move down to 162 from there, but this is still inside of a consolidation. If you take a box and look at this and you say, okay, where are we on a long-term trend for gold? I mean, really, I think what you could do is kind of very simply draw a box like this, right? Line up all your levels right there. Even take it here. You say we're in a consolidation. This was kind of an excess. Now we're just, kind of taking out some of that excess over here. That reverse move down here, right? Looks like a mirror. And now we're kind of consolidating still inside this area. I would say that probably silver looks about the same. Yeah, these are basically a consolidation within this kind of zone, right? Well, this is a really wide zone. But I'll take this box, which is what we drew on the daily, and say, this is kind of, always use your box and your line tools. Very helpful because you can see exactly what's happening. But right now with inside a range, it's gray. It's not a long-term buy. Daily on silver, you have this, which is clearly 2601 buy point. Never got there, dropped down. Kind of a surprising one-day wonder right there. Let's get rid of this. It's too darn big, this box. Maybe. There we go. But your colors told you very easily what to do here, right? We were out of a trade. You could have stayed away from it if you were using this as a trading mechanism. There's kind of some things that are going on, some things that you probably want to say, okay, this was great. Wow, I wish I had this. Oh my God, look how great this is. But you know what? It's a piece of crap. This Clover Health that just got a short squeeze going on. We had a great indication right there to go long. If you were really paying attention, you go long and then you kind of got out and went up. Maybe you would have seen that line drawn down, but still, wait, great. Made from 8 to 15, which is almost a double. I'll take that. Maybe to make all the way to 26 if you didn't get out. But right now it's in a no-go zone. This is just one of those trades that everybody's hoping is the next, GameStop, which is this right here, right? GameStop, so that major move higher and then kind of a major move higher right within the range. A lot of green. We're getting some great indicators here. We're getting some great signals. Use those. Right now, we're in a little bit of a difference now, right? We're hanging off a cliff right here to, let's see what we got here. 217 and change is the support right now. And then beyond that, you're going to drop to about 184. Oh, let's see what that is. 188, 185. This is kind of the next area that I think of interest right here, right there. 181 probably, 182, kind of approximate right there. You can always refine this and look a little closer or hover, and when you hover, it will take the levels. I think that right now, when you look at this, there is an opportunity for this to kind of definitely move lower. Now, of course, shorting GameStop is, risky. Do it through options maybe, kind of how I did it. And what you have here is the rollover of the momentum, very significant rollover of the momentum. We've seen that a few times. And when you see that, we really didn't recover until when we saw that rollover last time, 324, this kind of consolidation, good support at the 185, 170s, that whole range. And then what happened was that you got that pickup again on the excitement. Now, if that excitement and that shine wears off of some of this, you really got some problems. I mean, look at AMC has been doing great. It's up again today, trying to reach that high. I mean, I don't know about you, but this is hard to play. There's nothing there on a daily. You try to play intraday. Now, we got some great signals again here. We got the perfect signal, right? Got you in at about 15, traded up to about 44, went long again, currently long on the daily, kind of bring this back a little bit. Let's do something like a 60-minute. You can see the choppiness in here, but you got some good runs. And anywhere it's green is a long bias, and a red, very few reds, short bias. Well, at least on this chart right here, you could probably go back and see some. Oh, that's just the only ones that are there. Very little on this chart. So again, I do daily because it's just good for training. You can do this on any chart, any time frame. Workhorse, something I talked about a lot. That I thought that if they got a deal, now they're in a lawsuit. Now they're looking to get this deal. This momentum is just fantastic. Look at this terrible downtrend and the momentum that we saw over there, and then the move higher right now. We got some great momentum sitting inside of a really good, what I would say. Now let's move this. Let's move this one over here. Consolidation right there. It looks pretty tight, compared to where we were. Got a couple pops up, pops out. Right now, market's probably affected more than anything. Ethereum down, 3% today. Bitcoin coming down a little bit too today on a stronger dollar. How are we doing on time? I got some of yours. XLB, I told you last week about a short opportunity on this. I personally closed this trade yesterday after getting in, kind of in the inside. Very rarely do I trade on the inside, but this thing was just smoking hot for a long period of time. And this move, I saw a couple of different changes of momentum right about there. Decided to take that kind of for a long term. It was on an uptrend. Made about, $6? Right about there, I guess I showed it. $6 per share. Kind of, I don't know if that trade's over yet. It's just down a little bit. I think you probably have down, which is where I called it yesterday when I got out of it, about 81 and change, which is right where it is some support right there. Better support, probably $79, $80, right about there. Someone's asking, let's see, who do we got? Mike. Hey, Mike. Asking about MOS, the Mosaic Group. That's how they say it in some countries, Mosaic. Mosaic, which is a fertilizer firm. Not looking so good. Probably the commodity situation, corn getting hacked by multiple percent and coming into commodities dropping significantly, which is going to probably require less planting. Fertilizer stocks get hit. So if you look at this and you look at corn at the same time, corn, this drop right here, kind of this movement lower has probably been an issue. I mean, we saw a limit down, I think, yesterday, 670, 637 or 635. 35 points yesterday, pretty good. Mosaic's probably following some of those around. We showed you DBC before. On the big chart, DBC is the commodity basket. Kind of looks like this rollover also. Still a pretty strong overall momentum, but this roll, this yellow bar in the Command series is really the key looking at that. So going back to Mosaic, let's kind of take a long-term look at this. Longer. You're at some key support here on Mosaic. I mean, you had this beautiful run from 15 to 30, a double since April. I think that's a little bit greedy trying to stay in it forever. I would think that maybe if you can get a drawdown, probably down to the 25 level, which would be very significant, but yet at the same time, pretty good support. Below that's pretty ugly. Yeah. You're in good shape right now, I think, at the 29 level. You stop right on that level right there, $29.91, $30 currently trading in the pre-market. You do anything, though, that is a little spooky, you could probably just drop right down, not right down, but over a period of time, back down to this key level here, about, I would say, 22 to 22 and a half or so on that. Kind of trying to pin it a little bit better with our radar. Another signal, what we call short, was the Planet Fitness kind of momentum just rolled right over. We talked about this a little bit. Something, one of my favorite things to short when it gets into the 80s, kind of right now at 74 and change. If you drop below this 73 number, you really have a long way down. There's not much support going on right there. TIGR, TIGR. So I want to go back and show you. Well, let's show you the weekly first. This thing that we have in front of us, it's really good momentum on a weekly basis. It does an incredible amount of respect for support and resistance lines. So pick this up right about there. Let's take a look at this again on a daily because I want to really focus in on this. Right there, 22s. Currently trading at 25s. It supports that line pretty well. And when it got to there a couple days back, or yesterday and the day back, bought some of that, added to it. And right now we're squarely, what is it trading in the pre-market, 25.53, above that line again and on potentially on the way back. This is the Chinese Robin Hood, if you will. We talked about some of these other ones. CVAC got killed yesterday. This is CureVac with their lack of effectiveness of their drug for COVID. And finally, ChargePoint. Look at that, pretty good looking chart on off the bottoms, triple bottom right there on support, off of support. We got some support lines. We got a nice looking, what I call, a bounce from the downside. You look at this, and what you see is that you get this kind of move from below and starting to roll up, and you got the hold right there. And what you get is a pretty good opportunity with multiple confirmations right there. So, you get this nice trade that moves up with a nice level of momentum that is green, has a lot of air above it. And right now, if you got to kind of get above 31.85, which is right now a little bit, and then you're in pretty clear zone. Listen, thank you. We call this the banger, by the way, the banger setup, right? Where you start to see the roll and the move, the hold of support, and then the move up, and then above the line move, and then you get the banger. Moving from 23 up to 30. Not a bad move off of the bottom. Listen, we'll be here next Friday to talk to you about everything. Have a great day. Have a great Juneteenth, which is officially a federal holiday today, which is out there. And there's your futures going down, and your YM's getting smoked into the open. Thanks for joining me, and I will see you again next week.